Earnings season pretty much over, so who were the winners and losers? I'm joined by Raman, a Senior Research Analyst with Thomson Reuters. Nice to see you again, Shri.
Hi, Rhonda. Always nice to be here.
It's interesting when you look at earnings growth and revenue for the S&P. A little bit challenged. It was still up, but if we take out energy, it would have been a whole different story.
It does look a lot better without energy, but the fact is energy is in the S&P 500, and we do take that into account when we look at all the numbers. And they don't look terribly good this quarter. There's a lot of downsides, energy dragging a lot of things. There are a couple of upsides, so there are a couple of things to look forward to.
In terms of the upside, we saw healthcare did very well and financials did very well. What was kind of the standout story behind those sectors?
Healthcare really did stand out this quarter. It blew analyst estimates out. Just to give you some context, before the quarter started, they expected earnings to grow at around 7% this quarter. They blew estimates out. They grew by about 18% this quarter, earnings. So that's a fantastic move. And of course, the biotech gets a lot of credit for that. Everyone talks about biotech. It's glamorous. But it's actually the healthcare services that actually did, facilities that did fantastic this quarter. They actually have a couple of companies that did amazing. HCA did fantastic, and Tenet Healthcare did fantastic.
And how did they do in terms of results, those two?
So Tenet actually more than doubled what the analyst estimates were. They came in at 67 cents per share. Estimates were around 32 cents a share when they were expected to earn. So they blew out estimates. And think about this. Last year, the same quarter, they actually had losses.
Wow.
So they really turned it around. HCA, similarly, analyst estimates were around $1.20 per share. They blew it out at 135 cents per share. So HCA also completely exceeded analyst expectations. And that was the theme for healthcare in general. These are just two examples, but healthcare blew it out of the waters. Another way to look at it, look at the amount of companies that beat estimates. On average, you see about 66% of companies beat estimates. For the healthcare sector, we had 80% of companies beat analyst estimates. So they really, there weren't many that missed estimates, and those that did were hit pretty badly.
How about financials? What was behind the strength there?
So financials, it looks, the headline number is fantastic. It's 16.1%. But if you peel it back a little, it's not gung-ho. I'm not gung-ho about it. And the reason is because if you take out Bank of America earnings, earnings rates fall down to 9.1%. While that's strong, it's not the same as 16%. And a lot of that is driven by easy comparisons to last year. Last year, they took a lot of legal hits, and they took a lot of fines last year in this quarter. So if you peel those away, earnings actually haven't grown that much. And we expect that trend to continue for some time in the financials.
All right, let's talk about energy. Is it going to be this bad going forward? Because it was really disastrous when you look at those numbers.
It looks like it's going to be tight for energy for some time now. And one sign of that is if you take a look at capital expenditures. Exxon and Chevron already announced that they're going to cut down capital expenditures by over $3 billion each. $3 billion. So think about that. Where they're going to cut down projects. They're going to sell off non-core assets. They're going to do whatever they can to cut costs. So they realize that they need to tighten their belts now, given that this low oil price environment. And that's going to trickle down to all the other energy companies also. So we are seeing a lot of tightness in energy, and next quarter, energy earnings expected to shrink by 57% again.
Oh
so it's not just this quarter that's expected to continue going forward.
What else looks interesting to you in the second quarter? You said there were some positive signs when we started talking.
So some of the positive signs are there's not much positive, but of course, healthcare continues to beat estimates. Financials are looking good for the second quarter, but energy is really dragging things down. Another thing to look forward to is we track the negative to positive sentiment, and it isn't as bad as it used to be. So not as many companies are giving negative guidance or as negative guidance as they did in maybe a year ago. So that negativity in guidance is maybe not as high. And finally, take a look at the US dollar. It's really strong, and that's hurting S&P 500 companies. As you know, they do business all over the world, so their earnings are hit. So the question is, will that continue to affect earnings going forward? We do see that in this quarter. It may be a less of an impact in the next quarter, but it's likely to impact. But going forward, if the dollar does continue to be strong, that will impact earnings. On the other hand, if we start seeing dollar stabilize or even weaken a little bit, as many people are expecting, you might see earnings bounce back on that regard at least.
All right, Raman, thanks so much.
It's a pleasure.
I'm Rhonda Schaffler for The Street.